All right, what's going on, everybody? Welcome to another back testing session. So we're going to actually do it on the GJ pair. Um, so typically when I am doing my analysis in the New York session live, there's a couple of things I do before I get down to the nitty gritty. The first thing I do is check the news on Forex Factory. As we can see, it's Sunday, July 10th. So the market hasn't opened yet, but you see, you know, there's no major news going on. But I typically just check the news, figure out what the overall market is doing, and then pretty much get to the nitty gritty. I have a couple of rules when it comes to the news. If I see that it's NFP day or if it's a bank holiday, I will not trade that day. That's just my rules. Now, once I pretty much start, looking at the market, what I like to do is I like to typically look at the 4-hour time frame. And if I look at, and see that there's a good setup on the 4-hour time frame, then more likely there's going to be a very good setup on the 15 minutes. So for example, you see that price is kind of trending upward here. So that means I could probably get a quick scalp on a buy. So once I kind of see that, then that makes me want to go to the 15-minute time frame and start marking up my market structure. So the first step is that I mark up my market structure. Let me pause this recording real quick. Okay, I'm back. So first thing I do is just mark up from the I mark up institutional market structure from the 15-minute time frame to the 4-hour time frame. So what I'm going to do is just pause this recording and go all the way back in price as far as I can, and then start marking up. Be right back. All right, so as you can see here, this is as far back as price can go. So then this is where I start marking up my institutional support and resistance using the horizontal lines and zones. So we're going to start here. And these are areas where the institutions have done liquidity grabs. All right, liquidity grabs and then made a big move. That's typically how they move. They like to do liquidity grabs off of stop losses from retail traders, buy stops, all of that, and then make their big moves. So I can see it going here. And here. And so then what I'm going to do is I'm going to actually mark up zones here. And we're going to make these zones yellow. So we're making these zones yellow. So that way we can get an idea of how price is really interacting with these zones, grabbing all that liquidity before they make a big move. So you can kind of see how price grabbed the liquidity grab here, made price go all the way up to here. Same thing here. You can kind of see that here. Price really respected up here and really respected here. It really took a huge drop. These are the type of moves that you want to get in consistently, okay? So now we're going to move on to the 30-minute time frame and do the same exact thing. So we're going to go all the way back to where we left off. And then, of course, I see here that this is where the vertical line is. So we're going to mark this up. So I would say that this is some good market structure here. Price hit this area quite a bit and made it go all the way up to here. So we want to make this green. Good area here. Good area there. So we got that marked up. Then when I move all the way over, got a little bit of this area too. Then we'll move on to the 1 hour time frame. So this was some good liquidity here, bounced all the way up to here and down here. Now we'll move on to the 1 hour and go back to where we left off. So we just marked all of that up there. So now we're going to mark all of this up here. So I'll put a vertical line right here. See a lot of strong liquidity there that made price push up. Maybe not as strong, but still, it was a strong support area. So we're going to make this red. So we're going to mark up that. Mark up all of that. And then we're going to draw our zones on these areas as well. And as you can see, price is, definitely hitting these support and resistance areas. So now what we're going to do is move on to the 4 hour time frame. Let me do this here. So this is the 4 hour time frame. So since we have pretty much marked up all of this here, so then what I'm going to actually do is erase some of these zones here. So I'm going to erase some of them. So that way we can figure out what is the overall trend. So in this situation, I can see that price clearly trended up. When you look here, when you look at the RSI, price came close to being pretty much oversold at this point. So price took an upturn and pretty much went up to this next zone here, or pretty much up to here. So at this point, I would say that price is overall bullish, okay? And that's pretty much the start of step 2. The step 2 is we identify the overall trend on the 4 hour time frame and the 1 hour time frame and the 30 hour time frame. So I would say that price is overall bullish. Now, once we have figured that out, then I'll probably just put a note here that just says, price is overall bullish. All right. And that's what I'll put. Now, once I do that, then I'm going to actually go to, I might actually lift this all the way up to here, make a little adjustments. Very next thing that I'm going to do at that point is I'm going to move to the 1 hour time frame and see if price is still moving in a bullish fashion, just like the 4 hour, which it is. You can see price was kind of oversold at this point on the RSI, and price did a reverse, broke this structure, and took a up and pretty much sprung up to this next zone here. And then it looks like it's pulling back and still kind of pushing up. So that gives me a clear indication that price is still bullish. Now we're going to actually check on the 30-minute time frame and see if it's still trending up. And the question is, yes, it is still trending up. Okay. It's still trending, and it really, really pushed up to this point. Okay. So when we look at even the 1 hour time frame, you can even see a bullish engulfing candle forming there. So now we're going to go back to the 15-minute time frame. So now you can see on the 15-minute time frame, price is clearly trending upward. So then what I would probably do at this point is just draw a bullish trend line there. Okay. And then I would probably erase this. Now at this point, I would zoom in. And then I would actually erase this zone because I'm not going to use it. And then I would actually pull this zone down here, make this bottom zone here. And so now the very next thing that I would do is move this node over here. So now what I'm going to do is that now I'm going to actually locate the most recent low and the most recent high so I can place my break and retest lines. Question is, what happened to my RSI? Hold on, guys. Okay, I'm back. So now, for some reason, my RSI was acting up, but I got it back. So then at this point, we have already identified the trend. That's why we drew a trend line here. Now, the next thing we would do is locate the nearest high and the nearest low. So that way we can identify our break and retest lines. So then I would turn on my higher high and lower low risk strategy indicator. And I can see that this is probably the most recent high here. So this will be my breaking point for a buy at this point. All right. Now, for a break and retest for a sell, I probably would initiate this. All right. And that's what I would do. So that way, in any given situation, if price goes either way for whatever the case may be, I'll be able to catch that move whether it buys or sells. That's how I play that. Now that we have identified the nearest high, the most recent high, the most recent low, then that's when I turn on my institutional indicator. And this is where I locate mitigation zones and imbalance gaps. So here, we can see there's imbalance gaps here, which is probably a result of a big down move previously. If we go all the way to the left, and then of course we see some imbalance moves that resulted from going to the upside here. And really, imbalance gaps are just a result of the institutions putting in the huge buy or sell orders and making price go up really, really fast or go down really, really fast. But as a result, like in this example here, they did a buy order and made a lot of money off of this buy order because price just went up very, very fast. But left a lot of sell orders open as well. So to also put them in a huge negative profit as well. So they got to come back and mitigate these areas to make that money back, kind of like what they did here. All right. So they're going to have to, at some point, mitigate all of this area or this area. Now, we're in an overall bullish trend. More likely, they're probably going to buy it up and fill this imbalance, maybe up to this point or maybe all the way up to here. For some crazy reason, they decide to sell it down, then we know that they're probably going to try to fill this imbalance and maybe hit this mitigation area. So either way, I'm looking to catch at least between 12 to 20 pips, at least. So let's say if price buys up like we originally thought, then I'm looking for price to at least go up to here. That would give me a total of 70 some pips. So that would be TP2 that we would put there. Now the 20 pips will go all the way down to here. Let's just say to here, that would be TP1. Let me see something real quick. All right. So yeah, at least 28 pips. That's if price buys up. Now, if it sells, then I'm looking for to get at least 10, 12 to 20 pips at least. So let's just say down to here. Put my stop loss here. All right. That's what I'll be looking for. Now, then the next thing I would do is just turn on my Delorean EMA indicator. Now, of course, this is an indicator that I use as extra confluence. Anytime when the yellow EMA crosses the red EMA and it's either above or below the 50 blue EMA, then that lets me know if price is still in the trend. But I'm thinking price is going to buy in this example. But if it sells, then I would just wait for price to break and retest here and then go. But if it breaks this, then it's going to buy up. Now, probably in this situation, now if price crosses here, it goes all the way up to here, that probably would be a nice decent buy. So in this situation, then I probably would bring my break and retest down to here above this wick and see if it breaks below and to go above. And then we'll see where it hits. So then at this point, then I mean, 20 pips would be down to this point. So then in this situation, yeah, let me do that. Trying to bring price in as closely as possible. Okay, this is better. This is what I need. So yeah, this is what I need. I don't know why I couldn't figure this out before. So now I'm going to turn on my institutional indicator. So in this point, in this situation, let's see what price ends up doing. Let me turn this off. Okay, so price bought up, kept on pushing. So in this situation, that was easily 15 pips, and I definitely would have made my money there. So there you go. Now, and then price went up even further. So there you go. Wait, if I waited for the candle to catch momentum and not to fake me out, that would have been an easy 29 pips, just even from that point. Just even waiting for it to catch up and push there. That would have been an automatic win right there. And then of course, price, still went up. So, I mean, let's see if price kept on going or if it, yeah, see, there you go. There you go. That would have been an automatic win right there. Just imagine if we had got in when the candle gained momentum and rolled this thing all the way up. That would have been a 66 pips right there. Now let's calculate that. So we're talking about, my lot size is 4.22. So that's $42.20 a pip. So if you times that by 66 pips, that would have been a good amount of money. So that would have been a very good risk to reward trade there. Let's see what else price did. Yeah. So, I mean, really at that point, I would expect price to really kind of reverse because it's probably hitting, you know, a support, a resistance here, unless it pulls back and then, yeah, and then look what it did. Ultimately, it hit the second take profit and even went up even higher. So, yeah, so I expected that, but that would have been an automatic win there. So that's how we're going to do a top-down analysis. That's the reason why when we get to the 4-hour time frame, we want to identify the trend right there and identify the trend, and then see if the 1 hour and the 30-minute time frame is trending in the same direction. Because then more likely when you get to the 15-minute time frame, if you see that price is still trending that direction, you're probably going to get a good setup. So like you notice here, if I erase everything, right? Let's turn everything off, right? So as we can see here on the 15-minute, right? We started here. Now let's go back to the 4-hour time frame. You look at the 4-hour time frame, you can see that there was a huge bullish engulfing candle. So that lets you know that within the 4-hour time frame, that price was starting to go bullish. And we saw that was the end result. And so now we follow that up by going to the 1-hour time frame. And you can see that the bullish engulfing candle was starting to form, not as strong as the 4-hour, but it was heading there. And then on the 30-minute time frame, you saw that it was starting to form there as well. So by the time you got to the 15-minute time frame, you could see the same thing. It's all in confluence. So then, as a result, price sprung up into a bullish trend. See that? And even just catching all of this here, you would have made some money. So yeah, we did good on this trade. So that's it for this back testing session. I will see you guys on the next one. Take care. Bye.